Continuing from the previous video, I just wanted to edit a couple of things here. Okay. The first thing that I'm going to edit is this one here. Okay, you'll realize that in the previous video, you were given the value of inventory. Okay. In this video here, I will not give you the value of inventory at all. So that's what I was editing. The value of inventory will not be given at all. So you'll have to calculate it. And obviously, they'll have to give you more information on how to calculate it. So this is how it will be. Inventory for last year, you realize that we have nothing. So we didn't have inventory for last year. And I included one important point so that you can be able to calculate inventory for last year. The point that I included is 0.5, which has the ratio, okay? So you've got debt to equity for this year, last year. For this year, it is a question mark. And then you've got rate of stock turnover. Last year, it was a question mark, but for this year, it is 11. In this case, since you don't have the rate of inventory for last year, you might have to use that rate of turnover to calculate inventory for last year. But before you can do that, you first need to know the formula for calculating the rate of stock turnover. What is the formula for calculating the rate of stock turnover? It is simply cost of sales divided by average stock, which is just the average inventory. But here's the thing. What is average inventory? Average inventory is last year's inventory, you add it with this year's inventory, and then you divide it by 2. That's what average inventory is. You take this year's inventory plus last year's inventory, and then you divide it by 2. Okay, but you were given the stock turnover, and I will start with that. Okay, you are given the stock turnover, and the stock turnover was given to you as 11. You were also given cost of sales, and cost of sales were 2,200,000. When it comes to average inventory, you were given inventory for this year, but you were not given inventory for last year. Inventory for this year was 260,000. So all you are going to do now is to take 260,000 plus last year's inventory, which is just X because we don't know it. And then when you add the 2, you will simply multiply by a half to get your average. That's how you calculate your stock turnover rate. Now, to simplify this, for those that are not familiar with maths or hate maths or are not doing maths and doing maths late, I will simply take that 11 and multiply it by this half, just for me to get rid of the half. So I'll end up having 11 and a half. In the numerator, we'll still have 2,200,000. In the denominator, I'll be left with 260,000 plus X. And I will do the same as what I've done before. I didn't want to do it at the same time because it will have confused some of you guys, okay? Then I'm going to multiply the entire bracket with that 11 over 2. And this is what I've got here. The aim is to get rid of the denominator because that is very stressful. Okay, now what I'm going to do is to break this bracket by multiplying all the terms inside that bracket by 11 over 2. So I'm going to take this 11 over 2 multiplied by 260,000 and take this 11 over 2 multiplied by X. And this is what I will get when I do that. So when you take that 260,000 and you multiply it by 11 over 2, you will get 1,430,000. Then you will simply take that 1,430,000 to the other side. You transpose it. We say you are transposing. Everyone should be familiar with this because it's done in grade 8 maths. Okay, so you will simply take that 1,430,000, transpose it. By transposing it, you are taking it to the right hand side. So on the right hand side, you are already having 2,200,000. You will take that 2,200,000 and minus 1,430,000. Because it was positive, it will change signs and become negative. On the left-hand side, you are left with that 11 over 2x. So for you to solve for x, you'll have to divide by that 11 over 2. In the meantime, please note that when you take that 2,200,000 and you minus that 1,430,000, you will be left with 770,000. Take that 770,000 and divide it by 11 over 2, you will get what I've got there, which is 140,000. That will be your inventory for last year. And I'm going to go back to my table. Since I've got inventory for last year, I'm just going to put it there as 140,000. So I'm going to compare last year's inventory amount to this, and you realize that inventory has gone up. And when inventory goes up, that is bad news cash wise, because it results in a cash outflow. When you record it here, you will simply say increase in inventory, put the 260,000 minus 140, and your cash outflow will be 120,000 in brackets. Okay, and then I'm going to look at my trade and other payables. As I've told you, my trade and other receivables, there is absolutely no information to enable me to calculate my trade and other receivables. So I'm just going to write it there as increase or decrease in trade and other receivables. I do not know. Okay. I'm basically going to go back to the table that I was given in the answer book that I highlighted earlier on. We have done inventory, that's fine. And as I've said, I don't know, I don't have debtors control, so I'm just going to leave that out. For now, I'm just going to focus on creditors control, and I will focus on the sales income tax, which was on the credit side. Sales is actually not sales income tax, it's sales and VAT, which is on the credit side. Because it's on the credit side, I know that it will go to trade and other payables. If it was on the debit side, like it was last year, obviously, it went to trade and other receivables, because when it's on the debit side, it represents what is due to us. If it's on the credit side, it is what is due to SARS. So we owe SARS that 580. The only SARS we exclude from trade and other payables will be sales income tax. That is the only one that we exclude from sales, from trade and other payables. That is because it is too material. It needs to be shown on the face of your cash flow statement or statement of cash flow. So I'm simply, for this year, I know that my trade and other payables will be that 425,420. You add it with that 580,000. For last year, it'll just be that 520,000. So when you compare the two, you will realize that your trade and other payables have actually decreased. And the decrease in trade and other payables represents a cash outflow. You should know that by now, as it means that we are repaying our creditors. So when you find the difference of trade and other payables, you will simply take 520, you minus the 425,420 plus the 580, and you put that in brackets, because that represents your trade and other payables for the current year. And it will give you a cash outflow of 94,000. And bear in mind here, they didn't give us any information in the information booklet to enable us to calculate trade and other receivables. However, the only information that they gave us in the information booklet, that is, it relates to changes in working capital. Can't find it now. It relates to changes in working capital. And you realize that for changes in working capital, they told you what changes in working capital amount was. Now, as I've said in point 5, they specified that change in working capital for the current year amounted to an outflow of 78,400. So we'll put that as net change in working capital and see where it gets me to. Okay, so I'll just put it there as net change in working capital. But here's the thing, when you put it in there, it simply will result in you having to calculate trade and other receivables as a balancing figure, okay? And I will show you shortly. So all I did was just to take that outflow of 78,400, I added it with 120,000 plus 94,000, which is just a reverse operations, and I will explain it shortly, okay? And that will give me 135,600. Okay, so what does this mean? To work backwards, all I did was I was given this value here. So all I did was just to work it backwards by applying reverse operations. I added this 120 because it was subtracted. And then I added this 94,000 because it was subtracted. And then it gave me the balancing figure. And in this case, the balancing figure is 135,600. Now, what I'm going to do is simply to work out my net change or my net cash from operating activities, cash generated from operating activities by simply taking these two and adding them up. So when you add that 1,143,600 with 78,400, because that 78,400 is an outflow, you put it as a minus, and that will simply give you a cash generated from operations of 1,065,200. Okay, this was a very interesting paper. That's why I gave it to you guys as a classwork. It's a very nice paper. This is the 2020 November paper, if I'm not mistaken, IAB paper. In the next video, we will be doing dividends paid. You need to know what dividends paid are and what is the difference between dividends paid and dividends declared. There's a huge difference between the two. So just read these notes quickly, and this is what we will be doing in the next video. What's all?